Peter, when you say about a bad outcome, are you talking about a recession?
Well, I mean, the market was pricing for an outcome that warranted close to 125, 150 basis points of rate cuts.
Right.
So whether or not that's a recession or just a severe slowdown remains to be discussed.
But that's trade. If you add oil.
Well, but I mean, hang on a minute. So it is trade and any kind of follow-on impact that potentially might follow, and we're already seeing a backup. So therefore, I think if we want to go back to markets, the question is whether even now that you get this potentially additional shock, whether that is sufficient to warrant what we've already priced in, and I'm not quite sure it is.
Okay, so you don't think this will be enough to basically, tip the world in recession?
I don't think so, no.
Unless there's something very ugly brewing in the Middle East, such as a war?
Well, I mean, that's a different story then, because, currently what you have is you've got a disruption to the oil and energy market, and that's clearly worrying. But as long as it's isolated to that market in particular, that's one thing. I mean, if you have a full
is it isolated?
Well, I mean, if you have a full-scale war that potentially engulfs the entire region, that's a completely different story.
Right, but what do the markets need to start pricing in now? Because these are the questions that we're trying to ask ourselves, right? Is to what extent, first of all, is Saudi still a reliable partner for energy?
Well, I mean, we've taken out, or not we, the attacks have taken out roughly 50% of the production, right?
Yep.
So oil prices have gone up, and what you see is, they've initially gone up and then they moderated, so on balance they're now up around about $10 a barrel, let's say. Mm-hmm. These are not usual moves, but the levels that we're at are not entirely unusual, and I think the market and the world can totally cope with that. If you now, on top of all the other problems, take out an entire region potentially as an economic source in the global environment, then through emerging markets and what have you, you might get other distortions. I don't think we're priced for that necessarily, if that's what you're getting at. But I think we've priced quite a lot in all the other factors already, and you have to balance them against each other if you want to ascertain where asset prices are going.